welcome, welcome. We're on the Norada Capital webinar. So if this wasn't the webinar you were expecting, probably not the right place for it. But yeah, if you're here to learn about promissory note investing, about Norada Capital, kind of what's in our fund, you're in the right place. Couple ground rules here. If you see me looking back and forth, I've got a couple screens here. So I work off some questions over here to my right. I am paying attention. I'm just making sure I can chime in here and ask some questions from time to time. Sometimes I'll share my screen as well. As for anybody that has a question that comes up during the webinar, there's a Q&A box, right? There's a difference between the chat box and the Q&A box. The Q&A box allows you to add a question here. Marco and I usually kind of tally those up, and we'll answer questions at the end of the webinar. If it pertains to something we're talking about immediately, sometimes we'll actually just chime in during the webinar. So please use that Q&A box for any questions you have as we go through the webinar. I'll use the chat box as well. And Marco, if you promote me to the hosts there as well, I can add some links in there as usual for that chat. So guys, I'll be adding some links as well to the chat box, not the Q&A box, but the chat box, where I can add in access to our website, access to a profile form, access to our investor profile deck, things like that. I usually add those on throughout the call. So keep an eye on that chat box as well, so you can kind of copy and paste those links I send you into your screen there, or into your email, whatever it is. So again, a couple things to reiterate is just the Q&A box for questions. Keep an eye on the chat box for links. So kind of getting started here then. My name's Nathan Hall. You've probably spoken with me if I've invited you to this webinar on a phone call or email. If I haven't, you might have spoken to Michael or John or one of our counselors here. I could do these on a weekly basis just to kind of update you and give you insight into Norada Capital, the current holdings, the current businesses that back the fund. And so we'll take some time to do it today. This is a general FAQ. So typically on these webinars, Mark and I go over very specific things in terms of what is a promissory note, what's in the fund, the basics of the investment. And then we open it up to live Q&A. So sometimes we do topics, Marco does e-commerce topics, or he does a Broadway topic, or, sometimes we tie in real estate. This one's just very general today. So that's what we're going to be covering. Just a quick bit about myself. My background is last decade plus. I've been in the real estate world and the private money lending world. I've done quite a few real estate transactions over the years. I've owned rental properties. I've sold rental properties. I've borrowed private money. I've dealt in notes. So this is a world I'm very familiar with. And I can bring that knowledge into these calls with clients here. Now, Marco he's got 25 plus years experience on me. He buys companies, he invests in real estate. I mean, he does it all, right? He has a huge background in this arena. So Marco, if you want to take usually you can do it under 60 seconds to 2 minutes. You have a pretty lengthy background there. And I'll actually put a link, guys, to his website in the chat box, so you guys can do some more digging. But Mark, if you want to give some background on yourself, that'd be great before we kick off here.
Sure. Yeah. Well, welcome everybody. Thank you for taking the time to spend an hour or so with us today. And thank you, Nate. Just like to summarize myself as being a serial entrepreneur. I've been a serial entrepreneur since I was a teenager. I've been involved in multiple startups. I started investing in real estate early on. I was 18 years old when I jumped in. So I love real estate. I'm very familiar with real estate. But I've always been an entrepreneur, and I've always looked at how can I create and build and scale a business. And, over the course of decades, there have been, successes and failures. Fortunately, you learn from the failures from years ago, from decades ago, and you just build on that success. So today we're involved in so many exciting things, Nate and the team, that it'll be a lot of fun to see where we go over the next few years. But the two main businesses, the largest and the two main businesses that Nate and I are involved in, and our entire team, is Norada Real Estate Investments, which is essentially a nationwide real estate brokerage. We help investors build a real estate portfolio with turnkey investment property. It's a turnkey rental investing experience. And then Norada Capital is our investment fund, where we are building, growing, and scaling businesses that we are co-founders in, have equity positions in. And so that's our portfolio on the Norada Capital side. So those are the two main businesses that we spend our time and energy on. So that's just a very high level 40,000 foot overview of what we have going on and a little bit about myself.
Yeah, we have a lot of cross investors, right? A lot of our real estate clients invest in Norada Capital, and a lot of our Norada Capital clients invest in rental properties with us here. And yeah, for those of you who kind of dive in and do a little bit more research on us, you'll find Norada Real Estate Investments, on go directly to our website. We help investors. I mean, probably invest in 600 to 800 doors a year on that side of things, as well as the Norada Capital side here, where we're helping clients create passive income through note investments. So with that said, Marco, you do a great job at your 30-second overview of what a promissory note actually is. I love the way you explain it. It's super simplified. So before we dive into the fund itself, if any of you guys on this webinar are new to note investing, some of you guys are, some of you aren't. Marco does a great job explaining that. So can you break down for us, Marco, the investment vehicle, what it is, and then we'll dive into the kind of the companies that back the note.
Yeah, a promissory note is pretty simple. Everybody should be familiar with it. It's nothing more than a loan agreement. It's an agreement between two parties, a borrower and a lender, and it just outlines the terms, the start and the end date, the interest rate that's being paid, the frequency of that payment. And if you've ever signed a signature loan, a student loan, a car loan, a bike loan, a small business loan, anything that's a loan is essentially on a note, or also referred to as a promissory note. Sometimes with real estate, it's referred to as a mortgage loan, which is still a promissory note,
Yeah.
just backed with more language and more documentation. So anyway, that's the short version of what a promissory note is. Just a loan agreement between two parties, and it can be for whatever term and terms you agree to.
Yep, and that's why I love the simplicity of the investment. It's simply two parties. One becomes a lender, one becomes the borrower, and the borrower is paying an interest rate to the lender. We happen to pay on a monthly basis, right? Some borrowers, or some lenders, borrowers pay out on a quarterly basis or a yearly basis. We happen to pay on a monthly basis. So, for example, if I have a client that's investing with a self-directed IRA, we're making a monthly distribution payment to that self-directed IRA. And what I'm going to do, Marco, is guys, for anybody on the webinar, take a look at the chat box and you can kind of follow along with us here. I'm going to put in a link to our investor slide deck. And I think this makes it easier for everyone, Marco. We can put a link into the investor slide deck in there and everyone can just follow along. That link will take you directly, that I just sent you guys, will take you to an investor slide deck. And if you guys go to, I believe it's page 6 or 7, you'll see on there the actual note terms. And we'll go through these right now. The investment terms, the timeline, kind of a couple things that you need to have in place in order to create the promissory note with us. Marco, do you want me to start that piece, or do you want to go over that with our clients here?
If you can kick it off, that'd be great.
Yeah. So guys, pull out that notes, or that investor slide deck, and scroll to page 6 or 7. It'll say investment promissory note across the top. A couple of things to note with our investment in particular. In order to invest with our fund, we're what's called a 506C Reg D. You have to be an accredited investor. So that's super simple. The definition of an accredited investor is $1 million net worth, or a previous income for the previous 2 years of $200,000 individually, or $300,000 combined with your spouse, right? So you get what's called a letter of accreditation. You can get that from your CPA, your attorney. There's a website called verifyinvestor.com that you can use to go in and get a letter of accreditation. That's not our rule. That's the SEC's rule, right? So if you are an accredited investor and you want to create a promissory note with us, that's, basically rule number 1, letter of accreditation. Rule number 2 is our minimum. We have a minimum $50,000 investment. And then rule number 3 is a minimum term of 3 years. Okay. So that's the investment in a nutshell. Now, as far as the terms go, you can choose your term. It's between 3 and 7 years. It doesn't affect your interest rate. Okay. So let's say Marco comes to me and he's going to invest with me. And he says, "Hey, Nate, I'm going to invest $100,000 for 3 years." He chose that term because he has an LOA in place, right? Now, the interest rate is based on the amount that you're investing. Okay. We pay out a 12% fixed rate of return or a 15% fixed rate of return, depending on the amount invested. So you'll see on the investment note there, if you're in that link, $50,000 up to $100,000 pays out 12% annually. Okay. Anything over that, $100,000 and over, pays out 15% annually. So super simple math. If you do a $200,000 investment or more, we're going to give you a 5% bonus on the maturity date of that note. So let's say you choose a $200,000 note for 5 years. Your last payment in year 5 will send you your last payment. We'll send you your principal amount back plus that 5% on the 200,000. So very basic math, very simple. If you want to have a conversation about it, of course, you can connect with me or one of our investment counselors. But those are the 3 tiers: 12%, 15%, and then 15% with a 5% kicker on the back end on the maturity date. Again, monthly notes are paid direct deposit to you, whether you're using a business, whether you're using a self-directed IRA, a solo 401k, a basic checking account. We'll set you up with direct pay and we'll get you that note immediately, or excuse me, the distribution immediately following next month. And that's it, right? Super simple, guys. That's the note in a nutshell. What we're going to do now is dive into the businesses that back your note. And then I'll revisit this on the back end of the call. I'll take you through the investor profile and things like that. Marco, did I miss anything on the actual note and the offering itself?
No, it's pretty straightforward. You've covered the minimum, the rates, the frequency, and the term being 3 to 7 years, and you need to be accredited. So
Yep.
That's pretty much it.
Perfect. All right, so holdings. You'll also notice, guys, in that link I sent you, there's what backs the note, what backs the investment. There's several businesses that back Norada Capital Management, right? That actually hold equity position and partnership in. So Marco, again, you do a phenomenal job of breaking this down. There's 2 to 3 main kind of buckets underneath Norada Capital. Do you want to start with the first business bucket, I like to call it?
Yeah, there's 3 main categories as far as, our foundation, the portfolio of assets that we have. The first is what I refer to as the e-commerce category. There are a lot of name brand assets in there that we've acquired years ago, like 3, 4 years ago, and most everybody, if not everybody, recognizes what they are. The biggest of them are Pier 1 imports. And we can drill down into that a little bit so people understand, that it's not the brick and mortar stores. It's still Pier 1. We own the trademarks and the intellectual property and the brand, and we still run the business online. But there's Pier 1, Dress Barn, Linens and Things, and a few others. Steinmart. I refer to that as the Walmart before Walmart. Kind of a scaled down version of it, and of course, bodybuilding.com, an international brand. So those companies operate in this first category of e-commerce based businesses. That's a pretty exciting area. There's 2 or 3 unicorns in that category that can be brought back up to that $1 billion plus status. And that's the plan that we have with everything that we're doing over there. The second category I refer to as educational masterminds. A lot of people are familiar with what a mastermind is, or mastermind type of group. I refer to them as educational masterminds because they're heavily focused on creating valuable educational content for its members, in addition to the community or the networking that happens around it. And it's both online and offline. So it is really a very exciting space that we're growing very rapidly. And again, we can drill down into that to expand on it, to talk about, what it really is and how it works. Those are really the 2 main biggest areas of our businesses that we're focused on and growing. The third category, much smaller category, something that's a little bit more fun and sexy and exciting, and something that I certainly love and have passion for, and as do you, Nate, because it's in your family, it's in your blood, and that is what I'll call the arts, but it's basically theatrical productions. The majority of that being Broadway based, so Broadway musicals and shows. There are some others involved in that mix that are based out of the West End in London, but for the most part, we're talking about theatrical productions on Broadway that are actual Broadway shows, 4 of which, as a side note, are up for a Tony Award. They've been nominated.
Nice.
And the Tonys is coming up like this weekend. I think it's on Sunday. So we'll see what happens there, but there's a pretty good probability that at least one of them will end up with a Tony Award. So that's the third category. And so those 3 make up essentially our fund, our assets under management. And that's what we're, focused on building, growing, and scaling, and staying focused on. I think I pretty much covered it at that point, Nate.
Yeah, those are the 2 to 3 main buckets there. Obviously, there's a few things that kind of round out what's in the fund, some real estate development, some Bitcoin, things like that. But those are a very small portion.
Very
Uh,
small. Yeah.
so I think what's unique, since we're doing kind of a general FAQ and we're talking on a general overview, can we dive a little bit deeper into ecom and then dive a little bit deeper into mastermind education around those business models, like the acquisition of e-commerce businesses, kind of the actual flipping of those businesses, and what made them, I guess, for you so what was so enticing about them when you first started acquiring them?
The
It's
e-commerce
a good
businesses.
unique story. Yeah, let's start with ecom. Yeah.
So what happened there is it's pretty interesting. So my investment slash business partners at the time, who are now involved to a much lesser degree, saw an opportunity because they made a lot of money and continue to make a lot of money in the e-commerce space, like the online. Uh, I guess e-com is just the best way to describe it. One of the companies that one of my partners built was Zeus, which was the third largest dating site in the world. Built it up over the course of 10 years with his partner and then had an exit. They listed it on the New York Stock Exchange and they had a $300 million exit at that time. It was just a great business model. Still exists today. And so, they're very experienced with e-commerce. We got together and we thought, hey, let's just start building e-commerce businesses from scratch and we'll just create one every month or so and see, what kind of traction it has, and we'll just grow and continue to scale it at that point. And then my other business partner at the time thought, hey, you know what? There's all these major retail businesses that are filing for bankruptcy, what seems like almost every month. There's just the list is like in the hundreds, but all these retailers were filing for Chapter 7 bankruptcy. Sometimes they were reorganizing with a Chapter 13, Chapter 11, whatever it may be. But we thought, hey, you know what? These are very recognizable brand names that have spent millions and millions of dollars building up a brand that most people, if not everybody, recognize. So why not go after that and focus on the online, the e-commerce portion of it, and forget the brick
Yeah.
and mortar stores part of it? And that's exactly what we did. The first acquisition we went after was the women's retailer Dress Barn. So they filed for Chapter 7 bankruptcy, and it's a publicly traded company. We went in, made them an offer to purchase all their intellectual property, which is their trademarks, their brand name, their domain name, the website, and their customer database, all their subscribers. To us as a digital marketer, that's extremely valuable because you can build and scale a business online pretty easily as long as you have the right staff, the right team, the right suppliers, all that stuff to basically build that business. And so we took that over. We won the auction through that bankruptcy, and started rebuilding and re-merchandising the website. We kept some of the original team, and that business still exists today with, lots of daily traffic, daily sales, and it's just a growing business. So we're going to continue to grow that. What happened in that bankruptcy is the stores were closed, the inventory that was there was liquidated, the staff was let go, other than the online portion of the staff. So that model, call it a playbook, that model was so successful that we did it again with Pier 1. And we made him another offer. That one was a little more difficult to get because we had a competitor at the auction. So we had to go through that whole formal, uh, judicial bankruptcy proceeding through the auction. But we
Yeah.
ultimately won that as well. And so that was the second one. Then Linens and Things was the third one. And then I forgot what was the fourth, but we just kept stacking. It was bodybuilding.com came a little bit later. Steinmart, Model Sporting Goods, Ralph and Russo, a boutique women's apparel retailer, Roland Moray. Those are much smaller entities, but the playbook was really just to go after these distressed brands. Now, I will say we went after others. Like we tried to go after Forever 21, Toys R Us. Who else was in the mix there? There was a few others. They were either asking way too much, or it was too competitive, or something else happened where we just couldn't get our hands on it. But it's not for a lack of trying. But we're very happy with the holdings that we have, and we're continuing to build those entities. So that's the backstory of how we kind of ventured out into acquiring and then now growing and building these e-com businesses is just through, hey, I take no credit for it. I have to give, credit to my partners at the time. It was their crazy idea that ended up working out so well. So
Yeah. And again, I want to stress to everybody when you pull up the link that goes through the different businesses that are underneath Norada Capital, we're talking e-commerce businesses. I know some of you heard the word Pier 1, you heard the word Dress Barn, you heard the word linens and things, and you probably didn't catch the word e-commerce. So we're going through this whole explanation here. These are big brand name assets that are all online now, right? And Marco, what you didn't mention is that there's some big plans, and obviously there's plans are in motion to get Pier 1 back to, $1 billion business, to work on getting, bodybuilding.com, which I think you mentioned has over, 4 million views a month right now. And that's not even fully cranking yet, right? That's just, tip of the iceberg type stuff, right? So some of these big brand names that they're requiring, you know, maybe there will be eventually, maybe small boutique stores at some point, or maybe one of them will go public, who knows, right? But these are I was actually on the phone with a client today who had listened to some of our previous webinars, who was very excited about the fact that we're so well diversified over e-commerce businesses. We have educational mastermind companies, right? There's the note that the investment itself is well diversified. So, guys, if you have any questions on that, by the way, again, we have a few questions that popped in here, but feel free to continue to ask them. So great explanation on the mastermind, or excuse me, the e-commerce businesses there, Marco. Let's move into the mastermind education businesses, and I do like these companies as well because I've been part of, in the past, the growth and the scaling of a major, mastermind education company. And some people don't know what these are, but we can give the explanation now. And Aspire Tour, for example, Forbes dubbed us one of the biggest, business tours in the country right now, which is awesome, right? So there's some exciting things happening in the educational space. So I like to call it, maybe virtual education, but also there's some live events, things like that. So can we talk about the mastermind education space as well for a moment?
yeah, this involves a little more explanation just because there's
Sure.
pieces to it. So we have at the core two masterminds. We have Money Is, and we have Level Up. The Level Up Real Estate Mastermind is a sister of the original mastermind business we launched over a year ago called Money Is. And really, it's just to, excuse me, I have to apologize. I have a chest cold and I've been fighting it all day. So Money Is where members can come in and they can get content and education every week, plus every month. All this is online, live, it's recorded. There's an incredible app. They get a lot of value, a lot of education. They get exposure to many of the speakers and educators that we have, from well-known New York Times bestselling authors to industry experts and just knowledgeable people in the space on money and how to save taxes, defer taxes, build your wealth, grow your wealth, earn extra income, generate passive income, exposure to investment opportunities that the general public just doesn't have access to. We talk a lot about money movement and all that kind of stuff. And then 4 times a year, we have a live event, 2 times on the West Coast, 2 times on the East Coast, where we can get 3, 4, 500 of our members or more together at one place for 3.5 days, which is the live portion of the mastermind. So there's a vibrant, ongoing online community that people are very much engaged in on a daily basis. But then there's also our live events where people come together, in mass to, again, have 3 days of networking, content, education, just everything else, the exposure to everything else we have to offer. So the question is how do we get people to these 2 masterminds where we're actually generating our revenue and monetizing everything we're doing? The answer to that is we start off with a monthly event we call Aspire. It's the Aspire Tour. So every month in a major city, we have this major event. It's an all-day event. It's incredibly well produced. It's very lively, energetic, powerful. We have great speakers that come at each of these events, like Kevin O'Leary, Marcus Lemonis, Mark Cuban, Sarah Blakely from Spanx, A-Rod, like Alex Rodriguez. The list just goes on and on and on. In fact, Nate just put the link in the I don't know if you call this the show notes. I guess the chat box.
Show notes.
show notes in the chat box, where you can go to the website at aspiretour.com, ASPIRE, aspiretour.com. And you'll see there's, 20, 30 plus different speakers that we have that come and go on a regular basis. So it's really a very cool and dynamic group of presenters and speakers and content providers that we have come to each of our events. And so these Aspire events are great because people come, they love it, they get educated, it's like drinking from a fire hydrant, and we expose them to our world and the type of education that they can get that they normally don't get from their friends, their parents, their schools, etc. So the funnel basically works like this: people come to an Aspire event, which is the largest business tour in the US, each and every month. From there, we allow them to attend one of our master classes, either for real estate, level up, or the money is master class. At those master classes, they get 2 to 3 days worth of deep dive education on a specific topic related to what we're talking about, like with money movement and whatever else.
Yeah.
And at that event, we'll convert about 20% or a little bit more, but 20 some percent of that room to our mastermind. And that's where we want them, because at that point, they're really in deep with us. They're living in our ecosystem. They're getting a lot of great value and content. And they have an annual subscription that they can renew each and every year that just creates annual reoccurring revenue for our business. So the membership base continues to grow. Our revenues continue to grow. The valuation of that company continues to grow. And we continue to reinvest in those businesses to provide more speakers, better speakers. Although we have the best of the best, they're already like top shelf A-class speakers. But we just continue to build on what we have. And then maybe at some point, we might take it internationally. It could be Canada, the UK, Australia, whatever else. But there's just so much still untapped potential in this country that, that's just another thing down the road. So that's how the mastermind business model works. People come in through Aspire, they go to our masterclass. The masterclass, we expose them to the mastermind, and 20 some percent of those people just convert and buy into that. That really is the long and the short of it, Nate. The only other little thing I'll throw in to add to that is we have a kind of a related but separate mastermind attached to all that called the Concierge Club, or excuse me, the Chairman's Club. The Chairman's Club is basically the entire enchilada. Anyone who buys into that high-level 5-star mastermind has access to everything we do, all the masterminds, all the events, anytime, all the Aspire events, access to my business partners, Eddie and Andrew, myself, and our whole team. Often the speakers as well, like John Gordon, 17, 18-time New York best-selling author, Ed Milet, you name it. Like anybody who we have at our events that are there, they have access to them because they all hang out in the same private rooms that we set up for them as part of the Chairman's Club. So it's just another way for us to monetize the people that come in and go deeper and deeper with us.
Love it. Yeah. And so guys, if you want more information on that, you can go to aspiretour.com/home. I put it in the chat box. You can also go to moneyis.com, and Level Up has their website as well. So you can find access and you can review all these companies online. Marco, did you want to speak at all to Broadway, or do you want to hold off on that for now? Because we do have some questions that are funneling in here. So
it's up to you. We could take some questions and then go into that a little bit.
Yeah. Well, and before we take questions, guys, I want to back up and help you understand the purpose of all these explanations here. Is that's what backs your investment, right? When you create the note, let's say we're going to create an investment for $50,000 or $100,000, and you're wondering what your capital is doing for you. Well, it's going towards the growth and the expansion of these companies, the e-commerce businesses, the mastermind education companies, the Broadway productions, right? Things like that. So that's what backs the investment, with the note. These are the companies that protect you in a sense. So with that said, we can certainly dive into some questions here, Marco, if you'd like.
Yeah.
I'll start top down. Amy Legenfelter, great question there. Does your fund allow room for non-accredited investors, minimum to invest? Great question, Amy. We do allow non-accredited investors in our 506B sister fund. We do have to have an established relationship with you, though, for over a year. So whether maybe you've been a podcast listener for a year, you've been in our system, or you reached out to us over a year ago, that's not our rule. That's just a rule that's put in place by our lawyers. you have to have some type of established relationship with a non-accredited investor to allow the investment into our sister 506B fund. If you have an email address to the investment counselor that's been connecting with you or the assistant that's been connecting with you, feel free to email in and we can have a conversation with you on that. Good question. Let's see. Marco, do you want to speak to Chris's question there? When raising equity, what is the amount of debt, and more specifically, what exactly are the terms of that debt? Thanks. Good question,
When
Chris.
I'm not sure I'm following. When raising equity, well,
Yeah,
we're not actually issuing equity. Our fund is a debt fund. You know, our instrument is a promissory note. We're not, at least not at this time,
issuing equity.
selling off or issuing equity. Although we could, it's just there hasn't been a need for it to date. It is an idea that I thought about and kicked around, you know, this year, as far as another option, but you know, I'm trying to understand the second half of your question. What is the amount of debt, and more specifically, what exactly are the terms of that debt? So I think we covered that actually towards the beginning of the webinar, you know, in terms of the you know, the investment structure, you know, the rates of return and the terms. So, you know, 3 to 7 years, it's your choice. It's either 12% or 15% based on the invested amount. If you're at 100,000 or more, it's 15% per year, paid monthly. But Nate, am I actually answering this question or am I off?
Yeah, I mean that's the way I'm reading it. You know, again, we're a debt fund. We don't
Okay.
issue equity, and yeah, the terms of the debt, or aka the note between the lender and the borrower, are it's going to be 12% fixed or 15% fixed, and the terms are going to be 3 to 7 years. So that's how I'm reading that. And
Okay.
then Chris, to answer your question on statements there, yeah, we're working on an updated balance sheet at the moment, which we can get your way, and potentially a cash flow pro forma sheet as well.
Yeah.
So
Yeah,
we'll
the
see.
balance sheet is actually done. It was just done last week. I haven't had the opportunity to send it to you, Nate, or
Okay.
anybody. I was looking to put it into a kind of the prettier format that you were
Yep.
requesting, but right now it's basically, you know, reports from QuickBooks. So
Yep. So Chris, go ahead and email us, email your assistant or your rep that you've been connecting back and forth with, and we'll get to that. We'll get that your way.
yeah.
Let's see, Alex. You're welcome, Alex, for us hosting. We've never, so to answer your question, has there been an issue shares do not being, no, we've never issued shares. Obviously we reserve the right to do that if we ever were to go into some type of position like that. And Marco, you can speak more specifically to the COVID years. You guys grew through COVID, correct? So
Yeah, COVID was interesting because when it comes to the e-commerce businesses, people like stores were forced to close and they couldn't take in foot traffic, and a lot of them couldn't, you know, generate any kind of business, like especially like with restaurants, you know, they had to first close and then shift to a model where they were, you know, just only doing takeout or delivery orders, which kind of changed the restaurant industry to some degree across the country. But you know, the COVID years actually helped us because more and more people were forced to shop online. They couldn't go to the store or the mall. You know, things were closed for a long period of time, and then even when they opened, it was more of a hassle with the social distancing and having to wear a mask and everything else that was going on. So e-commerce actually, I don't want to use the word exploded, but definitely, you know, picked up considerably. But it also caused other companies to struggle, not just local companies,
yeah,
especially local companies, but even online companies and e-commerce based businesses. In fact, you know, the failure rate of many businesses actually went up online for whatever reasons because they had brick and mortar stores that were struggling or suffering, and so it actually accelerated the failure rate and the bankruptcy filings of many companies. But in a very strange and weird and indirect way, it actually helped us, you know, on the e-com side.
yeah.
Um, so was that the question?
That was part of it. And then he said, basically, he said, I think he's talking to the note itself. He's saying, let's say, for example, we issued shares in Norada Capital and we decided to turn some debt to equity. He asked, in order to gain the interest funds back, how would that be switched back to interest? I mean, it's an addendum, right? But do you want to talk to that, the switching back and forth.
Is that if we have an offering later this year for equity, or if
No, I
that?
think he's talking about if we had to issue equity
Oh,
in
I
shares
see.
of Norada Capital per the
Yeah.
note section of the note.
Yep.
Yeah.
Yeah, it's pretty simple actually. We would just exercise our right to convert the note like a convertible note. I mean, literally, that's what it's referred to as, into an equal amount of equity in the company that is the principal and interest of that note. There is a redemption agreement or redemption clause that goes along with that. It's actually more than just a clause, but there's a redemption agreement that piggybacks that allows us to buy that equity back at whatever the price is, be it like a month from now or 6 months from now. Basically, anytime we want, which is actually to your benefit, believe it or not, because you actually can and probably will end up making more money by us exercising that option to convert your note into equity and then buying it back later with valuations going up on this particular cadence on a quarterly basis. So it might end up panning out to be worth more to you than just the interest, which is a
Yeah,
weird thing,
sure.
but yeah, it's just a redemption agreement.
Yeah. Mark, good question. I know you said no problem. What about compounding? Could I trade the 2% bonus for compounding a 5 to 7 year note? Unfortunately, we're not a brokerage house, right? We don't have the ability just to compound your money back into your principal.
Yeah.
Per the agreement, it's a straight loan agreement, so we're just paying you an interest payment every month. Now, if you want to take your interest payments that we're paying you and reinvest those, we need to have a up to $25,000 minimum add-on, right? So for anybody on here who's considering, starting, let's say with $100,000 investment, and they save up, some interest accrual over the course of a year or two. If we're still taking on debt, you can certainly take that interest and add it to your note. We just require a $25,000 minimum to add on to any note. But thanks for
Right.
your question there, Mark.
We get asked that question about compounding pretty
Yeah.
frequently, interestingly enough. We're just not set up for it.
Yeah. And in the private raised world, like when you're doing private money loans or you're doing even equity investments, there's usually no ability to compound interest. It's not a
Yeah, and
type of investment.
and just to add one quick thing to that, Nate, in all honesty and transparency, I wouldn't want to do that
Yeah.
because the compounding piece just allows you to reinvest your interest, which marginally but increases your monthly or quarterly interest payments, but it's not creating any new cash inflows. It increases the cash flow or cash outflows, but not the cash inflows. So it really is working against us from a cash flow perspective. And I wouldn't want to do it for that reason because
Yeah.
each year we've got to hit certain milestones as we build this private equity firm, because there are liquidation events that will be providing us over
Yeah.
the course of the next 3 and 4 years some pretty sizable exits, and I don't want to impede the path that we're on. There's got to be a cadence that gets us to each and every one of those milestones. So we have these liquidation events and injections of new capital, which obviously is going to be paying off maturing notes. So
Yeah. We always have our anonymous attendee, Marco. Always one of them per webinar. Yeah, Marco, do you want to speak to just revenues, projections, and cash flows of the e-commerce side and the mastermind education side? He's just asking about revenues from those companies. Are they cash flowing? Or is there revenues? Things like that.
Yeah. I partially answered this question just a minute or two ago.
Yeah.
There are revenues that are coming from the various business entities, and those distributions, especially with the mastermind businesses, are actually increasing this year, month over month towards the end of the year. Actually, you just took the question away, but that's okay.
We can come back to it.
It's okay. It's fine. I got it in my head. But it's a combination, no distributions on our end are a combination of revenues that we are receiving, cash inflows from that, as well as a portion of that comes from the capital that we're raising. It's really a combination of the two. And if you were to look at it on a graph, that will be diminishing as the quarters go by, as distributions increase. And then the liquidation events are really just sale of shares or equity in the companies that we have, and or the other rounds of capital raise that these companies are going to be experiencing in the next year and 2 years, as well as either mergers, acquisitions, or the sale of various companies. Certain ones we want to keep because they're going to be absolute massive cash cows, and others are just going to be either taken public, and there will be a liquidation event there where shareholders like ourselves will be paid off, or receive distributions. Those are really kind of the two main events. Some of these in the path towards that will have new rounds of capital raising where there will be injections of capital, and some of that capital will be going out to existing shareholders, such as Norada Capital. So it's really a combination of those three things.
Nice. Sonny, good question. Hi, Marco. Can you describe if the mastermind businesses and Aspire Tour is more profitable, or the e-commerce business is more profitable? In other words, what is the most profitable business at Norada today?
Between mastermind, Aspire, and ecom, the mastermind businesses are the more profitable businesses at this point in time. The path to growing and scaling the e-commerce businesses is more longer term. It's going to be year by year by year. But yes, the margins are healthy there. But it's going to take time to build or grow and scale those businesses to the point where, we're going to see like sizable and healthy distributions. Right now, the focus is on growth, not on raping the companies from, whatever cash flows it has.
Yeah.
The mastermind businesses have very high margins. They vary a little bit from time to time, but 45 to 50% margins is what we were seeing last year. And, we expect that with efficiencies to increase over the course of time this year and next. Plus, we can grow and scale those businesses much faster than, in some ways, much faster than we can e-com businesses. The Aspire Tour is really not a profit center yet, but it will be this year, because we are now monetizing Aspire to create local events called Aspire Local, which will be the cash cow component of Aspire. The big events, Aspire Tour, that we do once every month, those are almost like a loss leader. We sell tickets, we generate a fair amount of ticket revenue, but the combination of the expense or cost of the venue, the speakers, and our staff outweigh, in our ad spend, outweighs what we bring in from ticket sales, which range from $47 up to $500, depending on the type of ticket that you're buying. We recoup a good portion of it from the ticket sales, but where we monetize that is the conversion of the people that go to Aspire to the masterclass and ultimately to the mastermind. So it's really on the back end for that business model. However, with the recent launch of Aspire Local that we have now done, I think 2 months worth, that is pure profit. That's where we are splitting profits pretty much 50-50 with the people that we put on stage that are presenting and educating, and then ultimately pitching their programs, whether it be group coaching or various educational programs. So our overhead on that is much, much smaller, but we're able to put together these Aspire Local events and bring people in, like put butts in seats, what we call buying units, and monetize that quite effectively. So, and that is very scalable. So we can do more and more of these Aspire Local events and have multiple Aspire Local events going on each and every month. So that is a far more scalable component of Aspire. And that's how we're going to build and scale the Aspire events. So that way, Aspire is a profit center. The master classes are basically a wash. We basically sell it for enough to break even on that. But then we convert 20 to as much as 25% of that room to the masterminds, which are $15,000 for money is. And the level up mastermind, I think, is 8 or 9,000 per year. It's less, but the margins are actually higher on that than they are on money is. So that's a kind of a long answer to your question, but that's how we're monetizing from Aspire through the mastermind. And Aspire Tour is becoming a profit center. It wasn't. It was basically meant to be what we refer to in the marketing world as a self-liquidating offer. It was basically meant to be more or less a break even.
Yeah. Great question, Sonia. Julie, what happens? This is a great question in terms of risk factor and risk tolerance. What happens if one of the companies goes bankrupt? How are the investors protected?
So this is a great question. So if one of the company, it's funny, I haven't had this question for a long time, but I used to bring it up myself long ago. With a portfolio of companies, hypothetically speaking, if something happens to one of those businesses, it struggles, it's not profitable. Worst case scenario, it's just we have to make an executive decision to shut it down. It's a dent in the bucket. It's basically a kick in the gut, and it has some impact, but it doesn't affect the entire company. We still have a portfolio of businesses that we will continue to build and grow and scale. None of our businesses are suffering. They're all growing at a different pace. They all require a different amount of attention. We have teams that we cross-pollinate between the different businesses, such as our ops team, our marketing team, fulfillment, et cetera, et cetera. But if something happens to one of those companies, it's not like it's going to be catastrophic where it takes everything down. So, as far as, investors being protected, the benefit of the note being tied to the company as a whole, meaning it has that portfolio as the foundation below it, is better than that note being attached to the one and only business as its collateral, if you will, like a secured note. Because if something happens to that one business, then there's no collateral behind that note. This is what a lot of the investors have told us is a form of diversification. They're investing in a company that has ownership and equity and control over a multiple number of businesses within that portfolio. They refer to it as diversification, and it really is a form of diversification. But that's the benefit of having that form of diversification, is you are riding on the entire foundation, not just one business.
Yeah. Great answer, Marco. Appreciate that. Great question, Julie. Nancy says, please explain the cash flow projections you posted. What she's referring to, Marco, is the cash flow projections on the investor slide deck, where it has gross revenues, interest expenses, operating note surplus. I think it's 2024 through 2027 is what she's talking about there.
I don't know if you're her investment counselor, Nate.
Yep.
I'm
not sure if I can certainly look it up.
Oh, well, here's what I'm going to suggest. I have a more detailed version of that, which is broken down with a little more granularity, right to 2030. And I have it ready. I was just waiting to button up a couple of things, and I've been trying to get it out for the last 2 weeks. If you can reach out to Nate later today or tomorrow, but certainly this week, we'll have it available. In fact, we'll just put it into the investor deck. So you'll just be able to download the investor deck over again. It'll be the new version. We don't even need to send it to you. It'll just be in there.
Yeah.
My goal is to have it in there by Friday. I mean, I wanted it in there 2 weeks ago. I've just been trying to get some information that's been slow coming. But it's essentially done. So if you can just hit up Nate or just download the investor deck by the end of the week, you'll see it in there.
Yeah, Nancy, whoever's been communicating with you on the Norada Capital side, whether it's Liz, Jess, Mike, me, John, you'll have emails from one of us. Feel free to email us immediately, either right now or right after the call, and we'll make a note to get that to you. So great question there, Nancy. Let's see. We kind of just hit on Ruko's question, risks of default, other types of risks, investment like this. Would love a rundown. Do you want to speak to risk, Marco?
Yeah, what I've said in the past on and off, but many times, is the things that I am mostly concerned about are the unknowns, like the unknowns, if that's the right way to describe it. In other words, it's things that I sometimes refer to as black swan events, like another COVID situation or a September 11th situation, or something that is very disruptive to the economy, disruptive to the economic system, disruptive to consumer confidence, anything that's going to create a pullback in in revenue or sales, and just drag things out. And this happens. It happens. I mean, sometimes we have major recessions. Sometimes we have black swan events. Like a COVID or whatever it may be. Um, will those happen again in the future? Very likely. When will they happen? Nobody knows. What will it
Right.
be? Nobody knows. Um, right now, we're on a path of growth, but growth can fluctuate. I don't have a crystal ball, and I can't guarantee that we're going to see a 20% growth rate this year and a 30% growth rate next year, or we're going to see a 40% growth rate this year and a 10% growth rate next year. Things can happen. There's always an ebb and flow, and I don't have direct control over that. We can only control the things we can control. And that just means that we have to adapt and navigate as things happen. And things, I can guarantee one thing, things will happen. I know that there will be, fluctuations and impact. And the thing we need to do as a team and as a company is make the right decisions to navigate through and protect and preserve the businesses and the brands that we have, so that way we can get through tough times if
Yeah.
and when they happen. So, is there an element of risk? Yes, every investment,
Always. Yep.
regardless of what it is, will have an element of risk. And so you just need to go in knowing that and be prepared for that. That's why, our investor packet, like our promissory note, comes with so many more pages of disclosures than it
That's
does
right.
just the
Yeah.
actual note. The note itself is like 6 or 7 pages. The disclosures are whatever, 30 pages
Yeah.
or more. So, but this is true with every type of investment. So, um, I just have to tell you that in full transparency.
Yep. Great question, Marco. Thanks for the question, Ruka. Chris is circling back to us. Okay, Chris, we understand your question now. What type of debt does Norada Capital have? What is the leverage percentage of the money that you have borrowed from bank sources? Good question, Chris.
Oh, zero from banks. So
Correct.
yeah, our capital stack is only one thing, and it's private. If it's private money debt, okay, it's
Yep.
capital from accredited investors, private investors. And that's the only thing. We haven't sold or issued equity. Uh, we can and we could. We just haven't thus far. And there's no institutional or bank financing because it just doesn't make sense for us. And most businesses, especially investment funds, private equity firms, and whatnot, they just don't check the boxes for banks or lending institutions. You just can't get bank financing. And
Yep.
so this is why the largest percentage of small to medium-sized businesses in this country raise capital to start and grow and scale their businesses through private money. And that's either through issuing debt, issuing equity, or maybe both.
Yep.
So yeah, but no bank sources.
Thanks for the question, Chris. Great question. Julie, we kind of just went through this, like what are worst case scenarios that could impact Norada's ability to pay back investors. Marco hit on the black swan events, right? That is worst case scenario, right? Is something major disrupts the economy, which then disrupts our businesses. So yeah, there's risk there. Uh, Kevin, great to see you, Kevin. Considering increasing my 100K investment to 200 to take advantage of the 15 or the 5, it's really a 15 plus 5% bonus. In doing so, is the bonus a monthly distribution or at the maturity of the note? Please give me a scenario. Great question. Do you want to hit on that, Mark, or do you want me to take that one?
You take that one. That's an easy one.
Yeah. All right. So simple answer to the question, Kevin. It's paid on the maturity date of that note. So let's say that you increase your note to $200,000 for another 3 years, right? We have a minimum 3-year investment to get that 5% bonus. So let's say you do a $200,000 investment. That's $30,000 per year in interest payments for 3 years, right? So that's 90K total over the 3 years. And 5% of the 200K is $10,000. So it's another $10,000 to you as a bonus payment at the maturity date of that note. So the bonus is not a monthly distribution; it's a one-time payout. So great
Before
question.
before people start dropping off the webinar at the top of the hour, I just want to throw a thank you out to two people.
Yeah,
Jorge said, I am a happy investor since January 2022. So that's over 2 years, two and a
nice
half
to see
years.
you on here, Jorge. I know him quite well. Thanks for
Yeah.
joining.
So that unexpected and certainly unsolicited. So thank you. I appreciate that.
Yep.
And then another thank you to Jennifer. Thanks, guys! Exclamation marks. Great information as always. So Jennifer's a regular. I'm tracking what you're building. It's beautiful. We like to think so too. On so many levels, it's we, you guys don't always see the challenges that come up in building a business, at on the operations level, the marketing level, the executive level. There's so many moving parts, and you have to have just a brilliant, brilliant team of people to work with. Nate is one of those people. Kathy Lawback, my operations manager, she's incredible. Our whole team is phenomenal, and it's not just our team at Norada Capital and within our family here, but there's layers of other people that are involved in each of those individual business and brands that you can go like 5, 6, 7 levels deep that you never even see. And these are all talented people, and I don't even know most of them. But it takes a village, not just a team, but it takes a
Yeah.
village. And so I feel fortunate and blessed, having a team like this and being able to work with these people. And yeah, I know there's going to be continued, trials and tribulations and struggles, but we'll get through it all. We'll get through it all. But it's great having a team like this. So it is beautiful. We're building a beautiful thing, and we hope to impact a lot of people over the years positively. And so, Jennifer, thank you for that.
Yeah. Thank you, Jen. Thank you, Jorge. Good to see you guys on here. Uh, um, Marco, do you want to keep going here? We've got a few more questions we can answer. Do you have a hard stop, or can we keep plugging through here?
We can go for a couple more minutes here.
Okay.
I have an appointment, but I can be like a few minutes late.
Okay. So Jerry asked, I missed the first part of the information. What is the interest rate minimum investment? So minimum investment's $50,000, Jerry. The interest rate is 12%. So anything 50K to 100K is 12%. Anything over $100,000 is 15% annually. And then there's a 5% bonus on the maturity date of the note for anybody that invests over $200,000. So good question there. And
Anybody
you can get all
interested?
that. Go ahead, Marco.
Something we failed to mention this entire time is if you're interested in either talking to an investment counselor like Nate, Michael, or John, just go to noradacapital.com and just fill out the form. You'll be assigned to an investment counselor right away, and we can get on the phone with you. But if you've been already thinking about it and you want to invest, then you can just again contact your investment counselor to get started, or just go to noradacapital.com/profile. It's a very simple one-page profile form, asks you about 10 questions. It'll send you the promissory note immediately through DocuSign. You could review it. If everything's good, you can just sign it. It'll go to my desk. I'll review it. I'll sign it, and then we'll have a completed copy, and you'll have the note with the wire information to get started. Interest accrues the day your wire clears, and you start getting paid right away. And then it's the beginning of every month through bill.com. Bill.com is the new service provider we're using now.
Yep.
So noradacapital.com/profile.
Yep. And guys, those are all in the chat, the webinar chat. So you can see those links there. You can copy and paste those. Julie asked, do you have any notes that are amortized, or are they all interest only payments? Great question,
Yes.
Julie.
Yeah, we could do amortized notes, but we've avoided doing them because number one, it's just a slightly different animal. Two, 99% of investors really just choose to go the interest only note route, where they have a monthly interest payment drop into their account, just direct deposit like an ACH payment, and then there's the balloon payment at the end of the note maturity date. So we've just kind of stuck to that model. It's worked well for 4 years, and we'll just continue with that model.
Yeah. Good question, Julie. Dinesh, good to see you on here. Dinesh, by the way, are you looking for any target amount to be raised in a specific duration of time?
Yeah, we're just off the top of my head, we're probably targeting another somewhere between 30 and 40, maybe 50 million, not more than that, probably 30 to 40 million over the course of this year and next. And then we're starting to taper off. We'll continue to raise capital, but it'll be diminishing. And then as the notes mature, we're just going to pay off the notes. So we'll see equity increase, debt service decrease. And that's really, that's really where those two meet, is the tipping point that we're going to see in about 12 to 18 months. And that's laid out in the new cash flow pro forma that will be released this week.
Great question, Dinesh. Uh, Malin, we spent quite a bit of time talking about the mastermind businesses in the very beginning of this webinar. We can also send you a previous recording of a mastermind businesses, and I would just look for the link to come in for this replay as well, where you'll see a whole section, 5 to 10 minutes where we're talking specifically on masterminds. Marco, if you want to give a short answer, you certainly can.
Yeah, or contact your investment counselor, whether it's Nate, Michael, or John. The really short version of Mastermind is it's a group of like-minded individuals that come together for a common goal, and that is usually to support each other, learn from each other, learn from outside, sources of content, and also to network and build a community. So it's a support group where you build and grow together, whether it's personally or in business or otherwise.
Yeah.
And it could be in an industry, it could be in a category, but it's like the Napoleon Hill concept that he wrote about in Think and Grow Rich back in the 1930s and 1940s. It's just a group of like-minded individuals coming together to support and grow together and learn. So there's content and community, the education and the networking.
Yep, that's right. A few more left here. I can get through, Marco. You're welcome, Malin, no problem. Ruka asked, what keeps you up at night in terms of Norada Capital's business? That's a loaded question, but it's certainly a decent one. Did you want to speak to that, Marco, or move forward?
Well, we've already talked about it earlier in this recording, which, by the way, is recorded. A link will go out. But like I said before, it's just ebbs and flows in the economy, on the global stage, the economic stage in the U.S., deep recessions, anything that related to it disrupting the flow of business or raising capital. It will ebb and flow. It happens every single month with us. In terms of sales, that happens. In terms of, you name it, like there's always an ebb and flow and change in the business landscape, economically speaking, financially speaking, you name it. So these are the things that I think about literally every day and every night. And fortunately, we've had a good run for 4 years or more. And could something happen in the future? Could, yeah, definitely. But we will navigate through it. Sometimes it's a jagged pill to swallow.
Yep.
But we'll always come out on the other side stronger.
Love that. All right. Derek, is the note secured to any physical collateral assets or real estate, or just against the income that Norada Capital can generate?
Well, there's a two-part question in your one question, Derek. So technically speaking, the notes are not secured. They're unsecured notes, but that doesn't mean that they're quote unquote not secured by collateral. So our portfolio of businesses is the foundation that is supporting the notes. So it's the businesses and assets within our portfolio that form the collateral of the notes. So yes, there are assets, they're business assets. There's a little bit of real estate, but it's very little real estate. This is not a real estate based company or fund. But it's primarily the equity value or the asset value of those businesses at this point in time. There are some pretty significant liquidation events that are going to happen over the next 12 months, 24 months, and 3 years, that are pretty exciting, and will open up other opportunities for us and the ability to give back to society, nonprofits and whatever else. But long story short, the collateral are the business assets that are part of Norada Capital that form the foundation of your note.
Great question or answer there, Marco. Great question, Derek. Alex, yeah, we can certainly send you a list of companies that we recommend for your self-direct in your IRA. I don't have an email address for you here, so if you want to type or respond to me here, I can track your email address and we can get that out to you for sure there.
James, you cannot do a 1031 exchange unless it's like kind, meaning that you are exiting, and don't quote me on this, check with your 1031 exchange accommodator. But I believe if you're coming out of a paper asset using a 1031 tax deferred exchange, you can roll into another one. This is what it was told to me by 1031 accommodator. So ask them, just say you're going out of a paper asset like a promissory note into another promissory note with Norada Capital. If it's similar or the same, you can do that.
Yep, right there. Make a note here. Thank you, Alex, for your email, by the way. Just get that here.
Man, some interesting questions here.
Timothy Cusson, is money in a holding house?
I'm not sure what that means.
Yeah, it's an interesting question.
Yeah, and here's another interesting one. What happens when the digital currency comes into effect? Barbara, well, first of all, currency has been digital for decades. Everything works on a digital rail right now. Like everything goes through, the electronic banking system and the SWIFT system and wires. All that stuff is digital. Like all currency is digital. It's just a ledger with a bank or a lending institution or whatever it may be. So we've been living in a digital currency age for a long, long time. Um, I think what you might be thinking is changes that could come up in the years to come with crypto assets becoming a form of currency, or maybe a central bank digital currency, which God forbid we ever see. Um, but that's a long term, not a short term thing and question. And I don't see that affecting anything that we're doing, because currency will always be currency, and it'll be digital and electronic all the time anyway. So it might change form, but it's still going to be currency. Currency is currency.
Last two questions here, Nancy. Will you be able to jump back in after 3 years or up if you choose 3 years? Any clue what the promissory note could possibly look like in 3 years? Good question.
Yeah, that's too far down the road. Will we have an offering in 3 years? Maybe is the best answer I can give you.
Yeah.
Will we have an offering in 6 to 12 months? Yes. In 3 years, I don't know. As long as there's deal flow and the opportunity for us to leverage and arbitrage investment capital and generate a 2x return, a 3x return on our end, then yeah, it's worth doing. Um, will I keep looking for deals and deal flow? Yeah, it's fun. It's great. And it allows us to do more and bigger things. And believe me, we have some great ideas for the years to come, but I can't tell you specifically what that's going to be in 3 years. I can see about 12 years down the road. And so, yes, we will still have options for you. But you know what? I will say one last thing, then we can wrap it up. If you're concerned about your note maturing in 3 years, and then you will not have access to 12% or 15% per year interest, lock in to a longer term. Go with a 4-year note or a 5-year note. You can go as much as 7. Technically, we can do as many as 10 years, a 10-year note. But we offer 3 to 7. So maybe lock in to a longer term, like a 5 or 7-year note, and then you don't have to worry about it in 3 years. You're just locked in, and you'll just get the interest payments for a longer term. So
Yeah.
all right.
Great question, Nancy. All right, guys. Well, for those of you who stayed a little bit longer with us, we appreciate you. Thanks for sticking around. Again, if you have any questions, if you're not sure who to contact, noradacapital.com. You can fill out a form there to get contacted by us. If you want to get started, super simple. Go to the chat box right now. You can go to noradacapital.com/profile. Takes you 5 minutes to fill out the profile form that gets your contract drawn up. And we can contact you as well and confirm the titling and the terms and et cetera of your note. We can work on getting you funded. So Marco, I appreciate your time today as always, sir. And again, thanks for battling through here. I know you're not feeling great, so we appreciate it. And we'll chat with you guys soon, okay?
Thank you, Nate. And thanks, everybody. Appreciate your time.
Take care. Bye-bye.
Thank you. Bye-bye.